Hello and welcome to this new edition of Bourdier's Monday Report. Last week, we saw the release of statistics on the health of the US residential real estate market. Unfortunately, activity remains sluggish and the decline in housing starts and building permits continues. High prices and persistently expensive financing costs are reducing American households' ability to access home ownership. With this in mind, the resumption of interest rate cuts by the central bank is therefore good news. Still in the United States, and as we can see on the chart, the good news of the week comes from retail sales. Indeed, and despite some weakness in the job market, retail sales rose more than expected in August, indicating that American households are not too worried and are continuing to spend. This is an important supporting factor for overall economic growth, since, as a reminder, household consumption accounts for 70% of the US GDP. As mentioned, the Fed lowered its key interest rates by 0.25% in line with market expectations. 2 further rate cuts are expected by the end of the year. This announcement supported equity indices in the United States and in emerging markets, which saw increases of 1.2%. In Europe, stocks fell by 0.1% and by 0.7% in Switzerland. 10-year yields have risen by a few basis points, causing bond prices to fall by 0.4% in dollars and 0.2% in euros. In this environment, the dollar index is relatively stable and has appreciated by 0.1%. A slight increase in interest rates and the dollar has not prevented gold from continuing its rise, gaining another 0.8%. This week, we will see the release of the Purchasing Managers' Index for both the services and manufacturing sectors in the United States and the Eurozone. In the United States, the August PCE inflation data will also be closely watched. Within equities among the defensive sectors, our preference is for the healthcare sector. We do not underestimate the negative news that has weighed on the sector's performance, particularly the uncertainty related to tariffs, which, moreover, are still not known. Nevertheless, we believe that the sector's historically low relative valuation now largely reflects this risk of disappointment, and that there is room for positive surprises. You can find a detailed version of this Monday report in the weekly market update published this morning by Bourdier Singapore. That's all for today. Thank you for your attention and see you next week.